Unit 3, which is capital budgeting. Do you know what is capital budgeting, by the way? Hello? Am I audible? Hello?
Yes, sir.
Do you know what is capital budgeting?
No, sir.
This was the chapter in financial management. Yeah, I think in semester 2. And there, the topic, it was capital budgeting. And again, now in enterprises performance management, this topic has been mentioned. Now, if you are not aware what is capital budgeting, let me start from the basic level. Capital budgeting, which is the technique for planning of fixed asset. Capital budgeting, basically it helps management to take a decision in regards to the fixed assets. Now, what are the fixed assets? Can you give me the example of fixed assets? Yes. Fixed asset example. Hello.
So building, furniture, computer software, fixed asset.
Building, furniture, machinery. These are the example of fixed asset. Correct. Now, whenever top management thinks of this kind of fixed asset, now whether how these fixed assets are paying return to the management, that is being, yes. How then this top management take a decision in regards to the fixed asset? And there are some techniques. These techniques are nothing but the capital budgeting. Got it? These techniques are nothing but the capital budgeting. Actually, in your syllabus, if you see unit number 3, that is capital expenditure control. Now, how to control capital expenditure? And their concept, need, process of capital budgeting, types of capital expenditure. Can you see my screen?
Yes, sir.
What it is?
Capital budgeting.
Capital. What is the title of screen?
So capital budgeting.
Capital budgeting. Now, capital budgeting. Meaning is nothing but the capital budgeting which allows us to plan for fixed assets. And in fixed assets, what happens? Company needs huge investment initially. Now, suppose if you want to purchase building or if you want to purchase machinery, do you require a huge amount of funds or not? If any company wants to go for purchase of machinery or building, we require huge amount of funds or not?
Yes, sir.
Yes. And the benefits are spread over a period of time. We don't get benefit immediately. Benefits are there, no doubt, but benefits are spread over a period of time. Suppose if you have purchased building but today, do you get benefit immediately within a year? Hello? Hello? Suppose if you purchase building today for a company, can you get benefit within a year?
No, sir.
No, because the building life is, what is the life of building, by the way? How many years generally? Life of building? Generally, life of building is 50 years, 75 years. Sometimes if quality construction is there, building may last for 100 years also. Same happens with machinery also. Machinery life depends the nature of machine. Sometimes 5 years, 10 years, 15 years, 20 years. If you are talking about computer, then every after 2-3 years you have to upgrade machine. Am I correct? If company purchases
Yes.
computer, every after 2-3 years, we have to upgrade the machine. Then only it is compatible to our work. And the same again, if you are purchasing a computer, benefits are spread over a period of time. Next 2-3 years, that machine will give you the benefit. Okay. Now the process. Now what is the process of capital budgeting? Basically, there are 4 phases in process. How many phases? 4 phases. Hello? Am I audible?
Yes, sir.
There are 4 phases. Phase number 1, project initiation. Project initiation. This is the first phase. Now, what is project initiation? Under project initiation, suppose if there is an entrepreneur and he wants to start a business. Now, if he is having, say, available capital of rupees, say 10 crores of rupees. So he is consulting his friends and experts that what kind of business to be started. Now, suppose you are also one of the friend of that entrepreneur. I am also one of the friend of that entrepreneur, and there is another person. He is also friend of entrepreneur. So everybody is giving idea to that person. Yes, sir. If you start this business is good. There is good demand for this product, and you will get good amount of return. Now, suppose if entrepreneur gets 6 ideas from his friends and experts, can he implement all 6 ideas? Can he implement all 6 ideas?
No, sir.
No, it is not possible, because the thing is that he is having only 10 crores of rupees. Within 10 crores of rupees, all ideas cannot be implemented. So he is collecting idea number 1. That is known as project initiation or idea initiation. Once he initiated the idea, once he get the idea, second phase, we are talking about the process. We are talking about this second thing. We are talking about process. Okay. First was project initiation. The second is project selection. Now he will have to select the project, appropriate project. Now the project, the required amount and the available amount. If it is matching, then only the project will be selected. Now suppose if he is having 6 projects in his hand. So as you said, all 6 projects cannot be implemented because he is having only 10 crores of rupees. Now assume that project number 1 requires 3 crores of rupees and project number 2 requires 5 crores of rupees. So 5 plus 3, how much rupees? 5 plus 3, how much? 8 crores of rupees. And project number 3 requires 2 crores of rupees. So 8 plus 2, 10. So available amount 10, and 3 projects requires 10 crores of rupees. Now project number 4 requires another 5 crores of rupees. So can he go for project number 4 in this case? Can he go?
No,
He
sir.
cannot. He cannot go because he is having only 10 crores of rupees. So project selection basically goes with the available funds with the entrepreneur. That is known as project selection. So he will select the project. Now, the third thing, project screening. So he will screen the project. So he will test which project is beneficial. So testing basically how much amount is required and how much return that project will give back. So there will be comparison, investment and benefit. So investment should be lower or higher. What do you think? And benefit should be lower or higher. Can you answer me? Hello.
So investment should be lower and benefit should be higher.
Yes, investment should be lower and benefit should be higher. That project he will select. So this kind of technique, there are basic techniques are there. So that technique we'll discuss maybe in next time. So this is called as a project screening. And number 4 phase is under process. That project implementation. Once he screen the project, then he will implement the project, implementation of project. So this is the process of capital budgeting. There are 4 pages. Number 1, project initiation. Number 2, project selection. Number 3, project screening. And number 4, project implementation. Can you repeat me? Which are the 4 phases?
So project initiation, project selection, project screening, and project implementation.
Correct, project implementation. So that comes under the process. Now number 3 point, calculation of cash outflow. Now basically cash outflow. Whenever you start any business, so you require money for purchase of machinery, that is outflow. Then purchase of material. Then availability of working capital. These are the examples of outflow. Of cash outflow means how cash is going from the business. That is cash outflow. Got this point? Cash outflow. Any doubt?
No, sir.
Then calculation of cash inflow. Inflow means how cash is coming to the organization. And now basically inflow, it is by way of sale of goods or services. That is inflow. Then if you are selling old assets, then naturally company will receive some money. So that is also cash inflow. So cash outflow and cash inflow, that calculation will be done in case of the cash outflow and inflow. Now, the next one is, what is this slide?
So time value of money.
Yeah. Please wait for a minute. Just these are only 2 points. Just read these 2 points. Now let's understand the meaning of time value of money. Yes, can you hear me? Am I audible?
Yes, sir.
Time value of money. What is the meaning of time value of money? Time value of money, it is the concept where as the time passes, value of money decreases. As the time passes, value of money decreases. That is known as time value of money. Now, suppose if I tell you that today I will pay you 1 lakh of rupees. This is my first statement. And then second statement is that I will pay you 1 lakh of rupees after 1 year. These are my two statements. I will listen my two statements. My first statement is today I will pay you 1 lakh of rupees. Okay. And the second statement that I will pay you 1 lakh of rupees after 1 year. So which statement you will prefer? Which statement you will like?
So present one.
Today and not after 1 year. Correct? Now, your answer is correct. Now, if I ask you why you like to have money today and not why not after 1 year? What is the reason?
So because after 1 year, the value of money will decrease.
Yes, after 1 year, the purchasing power of money decreases. In economics, it is said that purchasing power of money decreases. Today, if you are having 1 lakh of rupees, you may purchase more things. But after 1 year, the same thing, you may have to pay more cash for the same thing because the value of commodity increases and the value of money decreases. वस्तूंच्या किमती वाढतात आणि पैशाची किंमत कमी होते. Value of commodity increases and the value of money decreases. So basically, this is the principle involved in time value of money. So this is the meaning of time value of money. Now there are two things under time value of money: compounding and discounting. Now what is compounding? Compounding means generally this compounding technique which is used by insurance company, mutual fund companies. Compounding means we want to know the value of future amount. Today we are investing and we want to know the future amount. That is known as compounding. Now let me give you the simple example. Compounding means suppose there is one person having age of 62 years of age and he is planning for his retirement after 65. So he is approaching mutual fund company and he is saying, okay, sir, suggest me a plan. The plan which will give me 30,000 rupees per month. Every month it will be give me 30,000 rupees so that I can maintain my day-to-day things. Now mutual fund company may suggest to this person that today if you invest say 30 lakhs of rupees, maybe after your 65 years of age you will get 30,000 rupees per month. So this thing which is calculated with the help of compounding, that is known as compounding. So basically compounding technique which is used by bank, insurance company, mutual fund companies. You got about compounding? Did you understand compounding?
Yes, sir.
Now, vice versa to discounting. It is exactly opposite to the discounting. Discounting, which tells us the future value of present investment. Future value of present investment. Now, basically, discounting technique which is used in a business. Now, in business, suppose today you are investing money. Today you are investing money, and you want to know that what are the returns you are getting every year. Now, suppose today is 2022. In 2022, you are investing 10 crores of rupees in a business, and in next 10 years, business will pay you a return. Now, from today onwards, suppose if eighth years means what is the year? Today is 2022. If you add 8 year, what is the which year you will get? Yes, after
2030.
2030. So 2030, what will be the value which you are receiving in 2030? What is the value in terms of today? I mean, suppose in 2030, if you are receiving 5 lakhs of rupees, so today you might be thinking that 5 lakhs of rupees is a good amount, but you are receiving this 5 lakhs of rupees when you are receiving this 5 lakhs of rupees in which year? You are receiving this amount in 2030, but 2030, it is a very long period. Today you are in 2022. Over a period of 8 years, definitely the value of 5 lakhs rupees will increase or decrease. Yes, can you answer me? The value of 5 lakh rupees will decrease. So that is time value of money. Now, this is the point mentioned in our syllabus, techniques. What is the title? Can you read out title?
So techniques of capital budgeting.
Basically, there are two techniques of capital budgeting. Technique number one, techniques not considering time value of money. And we all learn what is time value of money. Am I correct? You know what is time value of money?
Yes, sir.
So there are some techniques which do not consider time value of money. And there are two techniques. One is payback period. One is payback period. What is that? Which is the technique? Payback period. And the second one is ARR. ARR stands for accounting rate of return. ARR stands for accounting rate of return. What do you mean by ARR? What is the long form of ARR? Yes. Long form by ARR, sir. What is the long form of ARR? Accounting rate of return. And the number one technique is payback period. Now payback period means how fast the project paying back to the entrepreneur. That is known as payback period. And there is another techniques considers time value of money. There are also some techniques which considers time value of money. And basically there are three types of technique which considers time value of money. Number one, net present value. Net present value. Number two, profitability index, PI. In short form, it is also known as PI, profitability index. And number one is NPV, net present value. NPV stand for net present value. And number two, profitability index, that is PI. And number three, IRR. IRR stand for internal rate of return. Internal rate of return. So basically, these are the three techniques which considers time value of money. Now, if I ask you, which techniques comes under the not considering time value of money, can you answer me? Which are the techniques which do not consider time value of money? If you listen carefully. Yes, please. Can you answer me? Can you answer me? Hello, hello, hello. Am I audible?
Yes, yes, sir.
Omkar, and they say techniques not considering time value of money. There are basically two techniques: payback period and ARR. Which are the techniques?
So payback period and ARR, accounting rate of return.
Accounting rate of return that do not consider time value of money. And techniques considering time value of money. How many techniques are there which considers time value of money? There are
So
three
three,
techniques. Three. And which are those three?
sir, NPV, net present value, internal rate of
Correct.
return.
And PI, profitability index. NPV, PI, and IRR. These are the three techniques. Which are the three techniques?
Sir, NPV, net present value, internal rate of
IRR.
return,
Yes.
and
IRR.
profitability index.
And profitability index. Now, let us understand the first technique, that is payback period. Okay. And ensure one thing, maybe tomorrow, just carry piece of paper with you. Piece of paper and calculator with you. Tomorrow, again, we will have one numerical example so that you will understand in a better way. Today, if you are not having piece of paper, it's okay. I will explain you. But tomorrow, do not forget to have piece of paper and pen with you. Are you getting me?
Yes, sir.
Now, let us understand payback period. Now, the meaning of payback period, as I told you, payback period, the meaning payback period, how the project is paying back to the entrepreneur, how the particular business is paying back to the businessman. That is payback period. Now, let me now suppose this is numerical number one. A firm whose cost of capital is 10% and is considering two mutually exclusive proposals, X and Y, and the details as follows. Can you see my screen?
Yes, sir.
Now, these are the three projects. These are the two projects this particular entrepreneur has. Project X and Project Y. As I told you, in project initiation, you might be having several ideas, several projects with you, but all projects cannot be implemented. We have to test. We have to select which project to be chosen. Now, how to do this selection? How to do this selection? That is nothing but the capital budgeting technique. Now, look at this table. There are three columns: particular, project X, and project Y. Now, for project X, company will have to invest rupees 15 lakh. This is initial investment. And for project Y also, same amount is there. How much amount project Y requires? How much amount? Yes, please. How much
15
amount?
lakh.
15 lakh. So it means both projects require same amount, 15 lakh, 15 lakh. But if you look at this after initial investment, this project X, the first year, project X will give you 1 lakh of rupees. In second year, means now today is 2022. So in 2023, project will give you 1 lakh of rupees. In 2024, how much amount project will give you? This project will give you in 2023. Yes. Okay.
2,50,000.
Yes. And in 2024,
3,50,000.
sorry, in 2025, Yeah, in 2025, 3,50,000. 2026, 5,50,000. 2026, 7,50,000. So this way the project will give you a return. Whereas project Y, look at this last column. Project Y also requires 15 lakhs of rupees. Now project Y will pay you in first year 6,50,000 rupees, and project Y will pay you in second year 6 lakhs of rupees, and third year 6 lakhs of rupees. Now, which project is to be selected? Now, first we will calculate payback period. We'll now how to calculate payback period. This is very simple technique. Please try to understand the steps. Now, let me explain you about project X. Now, what we have to do? We have to add every year cash inflow. Now, first year project X is giving 1 lakh of rupees. Okay, 1 lakh. And in second year, project will give you 2,50,000. So 1 lakh year amount and 2 lakh second year amount. How much is the amount? First year amount and second year amount. What is the total?
3,50,000.
3,50,000. Now this way you have to go on adding unless and until you cross initial investment. Unless and until you cross initial investment. So till second year we have received 3,50,000 rupees. Now in third year our project will pay us 3,50,000. So earlier 350 and third year 350. How much is the amount? Earlier 350 total and third year 350. Total amount is 7 lakh. Am I correct?
Yes, sir.
So still it is less than initial investment. Now again add fourth year. Fourth year amount is how much?
5,50,000.
Add to this third year amount. Add it. Add
9
lakh. Earlier 7 lakh plus 5,50,000. How much it is? First year, second year, third year totally it is 7 lakh. 7 lakh plus 5,50,000. किती झाले?
Sir, 12,50,000.
12,50,000. And how much amount we have invested?
15 lakh.
15 lakh. So up to fourth year, how much amount we have received up to fourth year? 12,50,000, as you said. समझ ना? Up to fourth year,
Yes,
how
sir.
much amount we have received? 12,50,000 rupees. Now, still it is less than our initial investment. Now, if we add fifth year, so what is the total? If you add fifth year, what is the total? Yes, please.
20 lakh.
20 lakh. Okay. Now, in fifth year, 20 lakh, it is more than your initial investment. Look at this. Initial investment is how much? Look at my cursor.
15 lakh.
Initial investment is how much? 15 lakh.
Sir.
And up to fifth year, up to 15th year, what is the total up to fifth year?
20 lakh.
20 lakhs rupees. Okay. So it means our payback period is between fifth year. But we don't know. So when we cross our initial investment, there we have to stop. Because in fifth year, our total is 20 lakhs of rupees. So here we have to stop. I'm getting my point. In fifth year, we are receiving 7,50,000 rupees. So the total becomes 20 lakhs of rupees. So stop there. Now up to fourth year, how much amount we have received? Up to 4th year, how much amount we have received? Hello, am I audible?
Yes, sir.
So up to 4th year, what is the total amount we have received up to 4th year? All 4-year total. What is the amount?
So the screen is not visible, sir.
Screen is not visible.
Yes, sir.
Can you see my screen now?
Yes, sir.
Is it visible? So up to 4th year,
Yes, sir.
We have received 12,50,000 rupees, correct?
Yes, sir.
And what is the total investment? What is the total investment?
15 lakhs, sir.
15 lakh.
15 lakhs, sir.
So how much amount we are supposed to receive? In 4th year, we have received 12,50,000 rupees. So how much amount we have to receive? अजून किती पैसे आपल्याला मिळायला पाहिजे?
So 2,50,000.
2,50,000. So that 2,50,000 we have to write on a numerator place. Numerator 2,50,000 divided by next year cash inflow. What is the next year cash inflow? 5th year cash inflow is how much?
So 7,50,000.
So 2,50,000 divided by 7,50,000. If you are having your cell phone, you can do this calculation. 2,50,000 divided by 7,50,000. Do it. Plus 4. 2,50,000 divided by 7,50,000. करून बघा calculation. किती येते?
So 0.33.
0.33. 0.33 plus up to 4th year plus add 4. 4 means this 4 year. 0.33 plus 4, that is 4.33. बरोबर ना? 2,50,000 divided by 7,50,000. Your answer is 0.33. 0.33 plus 4, that is 4.33. आला ना? 4.33.
Yes, sir.
So what is the meaning of this? The meaning is that your payback period, neither it is 4th year or nor it is 5th year. It is in between. It is what? 4.33. It is what? 4.33. हे 4 वर्ष पण नाही आणि 5 वर्ष पण नाही, याच्यामध्ये 4.33. So the payback period is 4.33. This is answer of payback period. Now, rule for payback period. What is the rule for payback period? Rejection or acceptance rule. Now suppose if management wishes to recover money within 3 years, मॅनेजमेंटची इच्छा आहे की 3 वर्षात आपल्याला प्रोजेक्टचे पैसे रिकवर करायचे आहेत. Now what is the payback period? What is the value of payback period? As per this calculation, what is the answer? 4.33. बरोबर ना?
Yes, sir.
And मॅनेजमेंटची इच्छा काय आहे? मॅनेजमेंट विश इज टू रिकवर द मनी विदिन 3 years. But this project is giving you within 4.33 years. So management wish is 3 years and project is taking long period. It is taking more period. If project is taking more period, simply reject the proposal. Vice versa. Suppose if management wish, management ची इच्छा आहे 5 वर्षात पैसे रिकवर करायची, 5 years, and your answer is 4.33. So your project is paying you back within 4.33 years. So the remaining period, it is nothing but your profit. Remaining period is nothing but your profit. So this way you have to comment, calculate and comment. This way you have to comment. Now let us understand about project Y. If you have not understood project S, everyone please try to understand project Y. We are calculating payback period. We are calculating payback period. Now for project Y, what is the initial investment for project Y? Initial investment is how much?
So 15 lakh.
15 lakh. In first year, project Y is giving us 6,50,000 rupees. Okay, and in second year, project Y is giving 6 lakhs rupees. So earlier amount and this year amount, add this amount, total this amount. Total kara. First year amount plus second year amount. What is the total?
So 12,50,000.
12,50,000. So still it is less than initial investment, that is 15 lakh rupees. Now third year, how much amount we are receiving for project Y? From project Y?
So 6 lakh.
6 lakhs rupees. So add to the earlier amount. Add kara earlier amount मध्ये. What is the total of earlier?
80,50,000.
18,50,000 rupees. So 18,50,000, which is higher than initial investment. बरोबर ना? Which is higher than initial investment. Higher or lower?
So higher.
Higher. So stop here. So if you add third year, it is 18,50,000 rupees. बरोबर ना? If you add all
Yes,
third
sir.
year amount, it is 18,50,000 rupees. So go back to the earlier year. Earlier year म्हणजे कुठलं? Second year. Second year, what is the total up to second year?
So 12,50,000.
So 12,50,000 rupees. And our initial investment is 15 lakhs rupees. So how much amount is left? What is the difference between 15 lakh and 12,50,000?
So 2,50,000.
2,50,000. So here what we have to do? 2 plus 2,15,000 divided by next year cash inflow. What is the next year cash inflow?
So 6 lakh.
Yes. 2 plus 2,50,000. By calculation divided by 6 lakhs. Do this calculation. 2 plus 2,50,000 divided by 6 lakhs. Correct? What is the answer? Can you share me your answer? The steps
So
which I
2.416.
2.416. So we can say 2.426, no? 2.42.
Yes, sir.
So this is the answer for payback period. Now, what was the answer for project X? Payback period. What was the answer for project X?
4.33.
4.33. And what is the answer for project Y?
2.416.
2.41. Now, project X payback period is 4.33 and project Y payback period is 2.41. So here project Y is taking minimum time. It is taking just 2.41 period to pay you back, whereas project X is taking 4.33 period. So, and both projects are requiring same amount. Initial investment is both are having 15 lakhs of rupees. But here, which project is paying fast as per this calculation? Which project is paying fast? X or Y?
So project Y.
Project Y. So project Y will be selected. Project Y will be selected and not project X, because project X is taking longer time to recover the amount, whereas project Y is taking smaller period to recover the amount. So this is the answer and this is the comment. So how to calculate payback period? Did you understand?
Yes, sir.
Any doubt? Any doubt?
No, sir.
Okay, fine. Now, this was about the project. Do not consider time value of money. So here we are not considered time value of money in payback period. Simply we have added every year cash inflow and we did the calculation. Now maybe in next session we will understand techniques considering time value of money. So for that purpose, next time you carry a piece of paper and calculator with you. Okay.
Yes, sir.
Now let us have for project A. Suppose if I ask you, this is the information about project A. Calculate payback period for project A. Will you try for this project A? Will you try it? Initial investment for project A is 1,40,000 rupees. Can you see my screen?
Yes, sir.
Yes, sir.
Okay. Now, would you like to try payback period for project A? Cash inflow for project A first year 20,000, second year 40,000, 20 plus 40, 60. Then third year 60. Again it is less. Earlier 60, third year 60. 60 plus 60 किती झाले?
1,20,000.
1,20,000.
20,000.
Now if you add fourth year, then it will be more than initial investment. बरोबर ना? If you add fourth year amount, it will be more than initial investment.
Yes, sir.
So there we have to stop. So 3 plus up to third year, how much amount we have recovered? 1,20,000 rupees. बरोबर ना?
Yes, sir.
So how much amount is left?
So 20,000.
20,000. So 20,000 divided by next year. Next year cash inflow is how much?
So 1 lakh.
1 lakh. So can you calculate and can you tell me the payback period for project A? सांगता येईल तुम्हाला मग? Because this kind of examples are expected in examination also. सांगाल का मला? What is the payback period? करून बघा calculation. Are you trying? करता का तुम्ही try? Hello? What is the answer? Yes, please. What is the answer? Hello? Am I audible?
Yes,
Yes,
sir.
sir.
So what is the answer? 3 plus 20,000 divided by 1 lakh. करून बघा calculation. 3 means this 3 year. 3 plus up to third year, our total is 1,20,000 and our investment is 1,40,000. So difference between 140 and 120, that is 20,000. So 3 plus 20,000 divided by next year cash inflow. Next year cash inflow is 1 lakh. करून बघा calculation, सांगा मला answer. What is the answer?
Three.
Yes, please. Yes. What is? 3 point how much?
3.0.
3 plus 20,000 divided by 1 lakh. परत करा calculation. 3 plus 20,000 divided by 1 lakh.
3.2,
किती
sir.
आलं? 3.2. So this is the payback period for project A. 3.2. समजलं का?
Yes, sir.
Okay, so today we'll stop here. Tomorrow you will just carry the piece of paper. We will have one more example for payback period and techniques which consider time value of money. Okay.
Okay, sir.
Okay. See you then. Bye. Any doubt? Before we
No,
close
sir.
session, any doubt?
No, sir.
Okay, fine. We will meet tomorrow.